And on this International Women's Day, we have a powerhouse of investment world with us, Amisha Vora, a trailblazer in wealth creation and market insights. From navigating market cycles to empowering investors, she's been a guiding force in the financial landscape. So let me welcome her on the show. Hi, Amisha. It's so good to have you on the show right now. And Amisha, you have seen women's role in the markets evolving from cautious savers to now active investors. What key shift stands out for you and what's needed to accelerate the financial independence?
Thank you so much for inviting me on this day. And I wish you, who's been inspiring all the viewers, male and female, both all the days,
Thank you.
365
Thank you.
days for their financialization journey. And to all the viewers also, very happy Women's Day. I think that, as you would be experiencing yourself when you have planned your finances well and that worry is behind you, how much you can focus on your work, how much that helps you in taking firm decisions in different aspects of your life, you would be experiencing, I have experienced, and this is the one key reason all women from different walks of life, whether they are working, whether they are working and independent, whether they are working and running the family, finances, or they're not working and part of a family, still why they need to learn the ropes of savings to investments to wealth creation. I think as more and more women are now working, they learn these ropes sooner, but the percentage, though increasing, is still less. So it's very, very important that we plan our financial goals very well.
Thanks for that view coming in. This is Snehi also joining in the conversation and would like to wish you a very happy Women's Day as well. Now, Amisha, there's a lot of conjecture in the market, where a lot of people believe that if a woman is employed, she's making her own money, then she's financially independent. But we also understand that earning your own income is only the first step towards financial independence. It all lies in the fact about how you plan your portfolio, how you plan your savings. What would be your advice to our women viewers and also especially first-time women investors on how they can begin their investing journey and safeguard their hard-earned money?
So what I say is that generally you spend 8 to 10 hours working to earn money. You need to work another, say, about 2 hours a week, not daily, to make your money work for you. And the difference is that all women earning, non-earning would be saving. But saving does not lead you to wealth generation. Saving needs to be channelized in right investment and assets so that it becomes your wealth in future. And that, to achieve that, first important thing is risk mitigation, which means that whether due to your own medical exigencies or any life exigencies or risk to your asset, you have to ensure so that your savings don't get eaten away. Once you have insured yourself, then the next important thing is to bifurcate your savings kitty into debt and equity or any other asset class. But equity is a must because this is the only asset class which kills the dinosaur, which is inflation. You cannot survive without equity being in your portfolio. Now, when you bring this equity to create wealth, there are 2 to 3 ways you can take that exposure. Till the time you don't have proper understanding of how to trade or how to invest, better go buy mutual funds. because there a professional is taking care of your money day in and day out. Start with smallest, whatever that small may mean for you. For someone, a 1 lakh a month may mean say small because it is equal to their shopping. They are wealthy housewives but not having any knowledge of why they should have their independent financial decision making. There are working women who can start with 10, 20,000, and there are small entrepreneur women, they can start with 1,000, 2,000, 5,000. But starting your mutual fund investments journey is a minimum must for all women who are educated or otherwise.
Certainly, Amisha, really point taken that mutual fund. Certainly, Amisha, really point taken that mutual fund could be one of those safe bet. At least you should have that as your saving goal. But Amisha, you will agree with me that 2024 has been very good for the markets, and amidst that, we have seen a lot of retail participation coming in, including the female investors. But now that the markets have turned a little jittery, Amisha, there is indeed nervousness within that pack. They are once again questioning that if equity market is the place to be. So Amisha, given the interest of the women participants, help us building a portfolio for them this International Women's Day, that if somebody has to start making investments in their own portfolio, what should be the building blocks and from where they can start, and in terms of allocation, how should it look?
So there are now multi-asset mutual funds which are available, hybrid mutual funds which are available, where the manager himself decides that looking at the outlook for equity as an asset class, looking at an outlook for gold as an asset class or fixed income, where should he allocate how much so that the capital is at least risk and more returns are generated. So for those who want to start, they should start with either a multi-asset mutual fund or a hybrid mutual fund, so that the asset allocation decision is also left to the manager. If you want to go beyond that, then please invest into flexi cap mutual fund, which is all only equity. But the decision of large cap, mid cap, small cap, based on market cycle, based on economy cycle, and based on risk return and valuation, the manager decides. So these are the three categories: multi-asset, hybrid, and flexi cap, where starters should first focus. And you should do, or you can start with some of the very well-known, well-serviced mutual funds, so that the initial onboarding is very easy for you.
If you like this video, then like, share and subscribe to ET Now.